Good afternoon, everyone. It's Chris from Solstice ATR powered by Vulcan. You can see us on the website, Twitter, Instagram, Discord. We use this adaptive algorithm solution for traders as well as professional. You can hit the subscribe button if you like, comment, share with your friends. We are not a broker dealer. Our past performance does not give us any indication of future results. Remember to use at your own risk, and data may not be copied unless requested from our website and getting in contact with us. So let's first start by taking a look at the February 24th, what happened in the market in relationship to inflation, the federal policy, expectation, gains and losses of this week. I put in some ETFs, some futures, some stocks to review the overall market. And what I wanted to tell everybody, maybe the bulls are put in the corner in a ring and they have no way out of it. It may continue lower. It may snap back and reverse back if they can get out of that corner and stand up and fight back. So as a technical analysis, we can look at history. It only gives us a reference point, like what happened in the S&P, in the Dow in 2000, 2003, 2004, 2008 through 2009 through 10, as well as 2022 and 2023, what's happening today. Please remember, every trader has their own way of trading on the long term, mid-term, and short term. Try to analyze just data as historical. Try to look at the future and understand what can happen from now till a month from now, 6 months from now, a year from now, 2 years from now. Look for opportunity, understand what you're willing to lose, what you're willing to gain, and protect your capital. Let's go to the first slide. In the first slides, I used the SPX, which is the Fortune 500 company. You can use SPY, which is the ETF. I went as far as 2000, 2001. You can see 1999 here and 1998. We had the rally. We had the tech bubble, 2001 and 9/11 Twin Tower. Then we had the reset in 2003. 2004 was the reversal. We have a similar situation right now in the overall market. I want you to pay historical data. Does not mean it has to happen in the future, but I wanted to reference these points. So here's the 2009, 2008 real estate bubble. The dump in 2009 took it till 2010, 11, and the 13 rally back up. So I wanted to show this area on purpose because we were in consolidation. We fell down. We tried to rally, consolidate, went sideways, and eventually we broke up. So is this happening in 2022, 2023? This is the February 19th of COVID, March 23rd low, the April, the May, then the consolidation, August, September, October. I have the historical data on the prior lows as well. I did the 2022 highs and lows. Every time we retested on the weekly, the 50 simple moving averages in yellow. The 18, I use an 18 simple moving average, then a 20. The reason why, it's the midpoint of the Bollinger Band. We use a 116 simple moving average. We use a 200 and 250. Most institutions use 200, 250, 200, and the 50 SMA and a 20. The reason why we use the 18 and the 50 to keep us in line on the weekly, if there is reversal, break up and break down bullish and bearish crosses. This is a cross. This is a bullish cross. This is a death cross that they call when the 50 goes above the 18. And it falls. We tested the 50 couple of times. Eventually, we broke up. We're coming back to that linear regression downtrend, holding up. Does the coming week we get a continuation down, or do we end up reversing, or do we retest F5 and F6, which is the 61.8, and F5 is the 50% Fibonacci, F3 is the 38.2. Can we go as far as 39.60, 39.70 to hold? Possibly. Can we reverse from here going back up? We have to pay attention to what the technicals offer us and where we are today. Please remember, if you like this video, give us a thumbs up, smash it. And you can use the YouTube channel. It's free, that weekly video that we offer. Let's go to the first slide. The first slide, I put the S&P, the Nasdaq, and the Dow. The reason behind that, I wanted to show a 5 here. It looks like a rainbow or colors. These are some of the moving averages with volume weighted average on them. That means where most institutions think there is a buyer and a seller. Whenever the thermal goes from purple and crosses into the red tape and the black goes on top, the sentiment changes to the downside. When the purple goes back on top and the red and the black goes at the bottom, the sentiment is bullish. We were in 2022 downtrending, and we eventually tried to break up. We are in a symmetrical triangle wedging on the combination of those three. If I go to the daily chart, what I wanted to show everybody is that the S&P, the Nasdaq, and the Dow are in a bullish term, and eventually on the weekly ended up reversing in a bearish sentiment. Are the bulls trying to fight back? Have they been cornered on the daily chart? Yes. Since the January 3rd of 2023, this is the low that we have to be careful. Does it act as support? Because since the October and the December, we are still in a small uptrend, but we have to pay attention to what the technicals offer us. I will use this in one more chart, and I'll get rid of the rainbow so we can make it simpler for us. Let's go look at the RUT, which is the small cap. RUT is the small cap in the Russell 2000. Oops, I made an error. RUT. Here we go. That's the small cap RTY, which is the IWM. IWN is the value ETF as well. On the daily, you can see that big rally in January, February. Then we eventually coming back a little bit underneath the 1/3 of the move from December, but the January low is here to this high on this annual chart. We are reversed back almost to 50%. The most important thing, do we hold the 50 SMA, the 200 to 250, or the 200 and the 116 around F6 before we get a bounce back up? We have to pay attention to the technical, because on the monthly, weekly, daily, it is in an uptrend. But on the short term, we are in a little downtrend if we go back to a shorter time frame. So what I want to do, go 3-year weekly to show that we are in consolidation on the Russell. We tried to clear the 2030, but have not been able because the 116 simple moving average is overhead. So we have to pay to that double bottom, the December and January low. We are still trending up. Even if we come back and reset, there's more opportunity on the weekly to purchase the dips, because you have to assess where to buy, where to sell on the short term as well as the long term if you're a day trader or a swing trader. Let's now go to some of the ETFs, and what I want to use is actually we can use MID, the mid cap, which is through American Century Invesco. It says mid cap growth. We can see it. We're going to get rid of that rainbow. Okay, remove the rainbow. This is the drawing for those moving averages. Edit the property. Do you want to remove? We're going to say yes. We're going to remove it so the charts look cleaner. We can see on the weekly chart how it is consolidating. We are holding that breakout of that down channel. The 50 SMA and the 18 may catch up to here in the F3. If we get a support here, we bounce back up, because on the daily, it's just a small reset in the mid cap. Let's take a look at the RSP, and I will go to the ETFs as well as the futures. You can see in the ETF, Invesco Exchange Traded S&P equal weight, we can see we were uptrending from November. This is the December low, because if I connect it, we broke a little bit here. We're underneath the 50 on the daily. We are holding the 61.8. Very important that we do hold the January low of 2023 in order to continue higher. This is the 200 SMA and the 116 in relationship to the levels on the charts on RSP. Let's take a look at right now. Schwab, SCHG, this is the growth. We can see in the growth we came back in. If I look at the A, this SCHA, this is the small cap in this sector. We can see we came back a little bit, but we are holding the 50 and the 89 and the 200, the 116 and the 200 SMA, because my fib, if it's from here to the low of December or the January low, we are a little bit underneath the 38.2, but we are holding the F5 and F6, which is a 61.8. Let's go right now. Take a look at the BTC Bitcoin. And what I wanted to do on the daily chart is show this reference point. Bitcoin is still in an uptrend. We have not been able to clear this candle here. We tested it a couple of times, couldn't break out. That's around the 25,270. We are looking for 25,300 to get a breakout and fill this gap. So far, we have not. If I zoom in from here all the way to the right, what I wanted to show here, we are in a linear regression uptrend, but we have a wedge here. BTC in the last 3 days gave up that high, that 25,300. We want to make sure we clear the 250 in order to get back up to the linear regression uptrend. Even if it falls back to this area back here in this consolidation without filling this gap here, that is an opportunity in the market to buy this zone to look back up in BTC, but we have to pay attention to what the regulators, the Security Exchange Commission, FINRA, are doing in relationship to crypto, NFTs, and Ethereum, and all the other exchanges around the globe, as well as the domestic. They want to be in the banking sector. This is why a little bit Bitcoin is a little bit right now is in limbo land until it finds support. It is in an uptrend still so far, but it's finding consolidation. Even if it finds consolidation here, this is an opportunity for a buy. And if it breaks the Friday high, which is around the 24,650, this is an opportunity to go back up in BTC. Let's take a look at the micro ES. And the reason why I want to use the micro ES, I wanted to show this level from the November low. You can see I drew a linear regression uptrend. We can re-anchor it. I'll remove this channel. We'll do it one by one. You can grab a line. This is what we call a uptrend channel. You grab the signal alert or the low point to the nearest higher low, and you can connect it. You can see we retested that area. We fell underneath it, tested the 61.8, bounced off the 200 SMA, and closed right on this channel. If there's going to be weakness next week, we're going to pay attention to the 200 and the 116, or is there opportunity for buyers to clear the Friday's high and the open of it and the Thursday's high in order to continue back to the backside of that downtrend that we fell from, which is F3, in order to continue higher in the S&P 500 or the SPY. Let's now take a look at the micro NQ, and I want to do this with the Fibonacci's that we use. We are noticing that the Nasdaq 100 has a little bit more weakness due to the fact the tech sector such as Apple, Amazon, Microsoft, Netflix, Tesla, Meta, some are reporting good, some are reporting bad, Google. We want to make sure that these sectors start finding ground in order to find opportunity to purchase these tech sectors. We have the real estate, which is XLRE. We have the consumer products. We have the XLP, we have the XLE energy, we have the XLF financial, so XLI, we have the IEF, the bond sector, we have the BIL, the short-term bills. I will do the bills right here before you can see the BIL. These are short-term interest rate bearing account. The most important thing is to pay attention to the IEF or the ZF, which is the short-term bond 5-year notes. We can see after this rally, because the interest rates and inflation have an effect on the market, the par value of that band retrieved because interest rates are starting to spike, and that we had almost like a double top and fell back in like an M pattern. We fell back to this consolidation and the breakout. Does this hold in order to reverse back up and the par value of those bonds start to increase to keep interest rates low so the economy can start going back on its feet? So this is part of the bond sector. Let's go back to the micro NQ. And what I want to do is use the Fibonacci's here to show you how to do the measured moves, a measured move as well as a fib in relationship NQ. Let's go here. And what I wanted to do, this is the daily chart. What I want to do is go down to that 4 or 5 hour chart to understand the levels for everyone and where your ranges are from the prior month and the following month. So if I zoom in this area, we take this area on the daily. We know this is the January low. This is the high. You can see my F6 is 61.8, F3 is 38, F5 is the 50%. We are holding the 200 SMA on the daily on the micro Nasdaq 100 or the QQQ in relationship to that 250. But I know my January low is important to the high. I do have a 78%. Usually when we get between the 0 and the 20% and the 0 and 180 and 100%, usually there is a retracement coming back either to F3, F5, or F6. F6 is a very good opportunity for a buy zone because you have the 116 and the 50 SMA. If this finds support here and reverses back up, you pay attention to the technical because you are coming back down to the retracement of those levels. Let's go to a 30-day overnight action. I'm going to go in the style. I'm going to do the setting. I want to make this appearance a little darker so we can see the black in the relationship to the overnight action. We can see now it is in black. What I want to do is go in here, go time frame. I'm going to go intraday. In the intraday, I want to use 20 days out or 30 days out or 90 days out. It depends how you want to do it. We can use 4 hours. Let's do at least 60 or 90 days back out. And what I want to do this is on purpose to show from the January low till the February high that we've had is so far that we are in an uptrend. We're getting a little bit of a retracement, but what I want to make sure, this consolidation here that happened in December, we don't fall below that low range of this box. And to the right side here, I want to do the measurements of these Fibonacci's on the weekly and the monthly to make people understand why there is a retracement in this area. If I take a regular fib from this low here in January 5th, you can see where the Nasdaq low is and the Nasdaq high that was in February 2nd of 2022. The gray area is the overnight action. If I don't mark it, it's going to leave those gaps up. And I referenced these points in the prior week's range. So what we're going to do, we're going to grab a Fibonacci. This is the Fib. You can do the anchoring like I do or duplicate the Fibonacci's on the chart. This is your low. This is your high. You can see where my 50% on the daily was, my 61.8 and the 38. I do have the 78 here marked. And I do have the 23% mark. If this is going to reverse back, I'm going to make sure that the 200 SMA we go above it, and we do hold that 50% in the 250 simple moving average. And these are the Fibonacci's on the 2-month range. If I reverse it, I edit the property and I do make it into a gray. You can take these levels and put them on your charts. I'm going to make it into an off or a white color so everybody can see it and push OK. Now we know where the levels are for the monthly ranges are for the last 2 months since the January reversal continuing higher. Is the bulls cornered in the corner, or are we getting a healthy consolidation before a second run back up? We have to pay attention to these levels, or is the inflation going to hurt us? So let's go now to the weekly 5-day range, and we're going to use a measured move. We know we consolidated here for almost 2 weeks. We looked up, and in the last 5 days we fell back in range. So I'm going to zoom in here. What I want to do is use the Sunday action through Friday's action. We're going to go get a measured move. This is the bottom one. You can see it says quadrant lines. These are horizontal lines. I use them this way. I grab the high for the week, which was here on Monday, to the low of the week. And what I want to do is anchor my level so everybody understand that this is the range. We're going to remove the study out of the way. So edit the property, just remove it. Don't show these levels, apply, push OK. Now we have a cleaner chart. We know our weekly high is here from Sunday to the low. Whenever I'm between the 80 and the 20%, usually this is a sell zone. Whenever I'm between the 0 and the 20%, usually this is a buy zone. On Friday, we pushed back up. But if we end up falling lower, these are your fib extensions below 0. minus 25, minus 50, minus 80 to minus 100, and vice versa from 0 to 20. 25, this is the box basically. The 50, 150, 180 to 200. Usually this area is a sell zone on the short term. So you have to understand how to look at levels. You're not going to get the top. You're not going to get the bottom. You want to trade what you see on the charts. And this is a good way to do it. And if you don't want to see that grayish area, which is the highlighted gray, let's see here in the futures, highlight. If I don't put the highlight on, I apply it, this is just going to show me the levels from high to low and the daily ranges of. And you can see the daily ranges from the Sunday. This was a short week trading, so we know where the levels, how to anchor it, and you use the 50, the 18 SMA, the 116, and the 200 in the direction of those moves to help you in your trading. And don't be biased, trade what you see, not what you think, and this will give you better efficiency in your trading. If you have any questions, please let us know. Do check the website here at Solstice ATR. This is our contact. Hit the thumbs up. If you have questions, let us know. DM us. Take care. Over and out.